trader. Today I want to talk about break of structure and how you can use it to trade the market effectively. Whether you like it or not, the structure of the market essentially determines how to trade the market. If you miss the basic, which is the structure, you are going to struggle in the market. So today I want to talk about what is break of structure. A break of structure happens when a previous resistance or support is broken, you understand, and this could happen in a bearish market or a bullish market. So in this case now, the market primarily moves in two fundamental way, which is either moving up or moving down. Professionally, it is not called moving up or moving down. Professionally, it is called bearish market and bullish market. So let me show you how this thing is being represented in a bullish market. For a bullish market, we know that a bullish market happens with a series of a bullish market happens with a series of um, higher highs and a higher low like this, and it is presented on the chart for you: higher highs, higher low, higher highs, higher low, higher highs. So for a break of structure to happen, the previous swing high must be taken out after the swing low, you understand. After this swing low, we are expecting the market to move above the previous resistance zone, you understand. So that is when we are going to have a valid break of structure in terms of the bullish market. So for the bearish market here, for a market to be bearish, we have to see a break of structure, and the non-bearish market forms with a series of lower low, lower highs, lower low, lower highs continuously like that. And at any given moment, for a break of structure to happen, you have to see the market breaking the previous swing low or previous support, as the case may be, or previous demand zone. So once the market breaks, ordinarily, if you are trading and the market is approaching a demand zone, you are expecting the market to continue buying. But if in a case the market break through the demand zone, which is the previous swing low here, if the market breaks this zone downward, it means the momentum is in the favor of the seller. So you are at a given moment in this market, you are to sell the market, you understand. You are not to do otherwise. If the market breaks through this zone here, you have to sell the market the moment the market return back again to any fair value gap or other block. So that is how to trade the market. And again, there's one important thing that I want to show you, which is the most important thing in finding the valid break of structure. You have to put it at the back of your mind that a valid break of structure happens when the candle that pierces the structure, pierce it or close above it with close above it or close below it with a body of the candle, not the wick. So let me show you what I'm talking about on the chart. So this is it, guys. If you want to see a valid break of structure, the break above the structure must happen with a body. The scenario is the same with a bearish market. In a bearish market, you want to see the market closed, you want to see the candle close below the support zone with a body, not a wick. So let's go to the chart. Let me show you a real life example of a valid break of structure in the market. So let us find break of structure. At this now, you can see that this is a gold chart. This is a gold chart, for example. This is a gold chart. As you can see, the market is clearly from this zone downward. You can see that the market is in a bearish movement. So let us spot the valid break of structure here. The valid break of structure happens in this zone here. You can see it. It happens here. This is it. The first break of structure, in this case, we can take it as our change of character, because before then the market has been on a bullish move, you understand. So now all of a sudden the market start moving downwards. So this is the first move that validates the bearish movement, because it changes the whole movement, the whole character, from forming higher highs to all of a sudden lower low. So, and after this value break of structure, a little pullback, and we can see that the market continue forming series of break of structure to the downside. This is another structure. Remember, it is a value structure when it close with the body, and you can see all the structure that happens, all of them follow the rules. They all close below the structure with the body. So that is how to find the structure in the market, the break of structure. The break of structure essentially show you where the momentum is heading to, where the direction of the market is heading to. That is essentially what the break of structure help you to find in the market. So once you understand structure and the break of structure, you can use it to spot opportunity in the market. So as you can see, the market keep on breaking structure to the downside, but all of a sudden now, this is a valid break, this is a valid change of character now, because the market forms a strong higher high, taking out all these previous uh, taking out all these previous lower highs. So this from Monday we are going to be looking at gold to find opportunity to buy in the market. So that is essentially how to find break of structure, or how to use break of structure to refine your trading entry and all other thing. So if you miss this basic thing, you are going to struggle in the market. Honestly, there's no two way about it. You have to understand structure very well, so that you can use it to your advantage in the market. Thank you. I want to see you in my premium class. If you want to join my premium class, you can join my community. There's the link in the description box. You can join the link there, so that we can take it from there. We can rub mind together and teach you, so that you can be a grandmaster in this game. Thank you.